Hello and welcome to Bitcoin Today from Crypto Corners. Here is everything you need to know about the price of Bitcoin for today, Thursday, July 17th. It seems that price has actually calmed down a bit. It's been more or less stable for several hours now, right around the $118,000 mark. The only question is, will it stay that way? The charts are showing that we should be heading for a breakout, and for the third time this week, events in the US, they might actually play a role as well. More on that in a moment. Let's first start with the crypto sentiment score. Interesting. It's climbed out of to a 6 actually, out of 10. But that's not the most exciting part. The most interesting thing is that the reason for this increase, it isn't just the Bitcoin price or a nice looking heat map on coin360.com. No, this has everything to do with trends. We are starting to see trend reversals, bullish trend reversals on several altcoin charts. And this means that on a growing number of altcoin charts, the trend is now flipping from bearish to bullish. And that's interesting because it points to a potential upcoming bull run and a growing interest in altcoins. Now, this isn't altcoin season yet, at least not per my book, that has a completely different set of requirements. But rising altcoin prices and more bullish trends, they are a strong indicator of a possible bull run on the horizon. An altcoins bull run. So when? Well, as you know, it could happen at any moment. Bitcoin does what Bitcoin wants, and the same goes for many altcoins. But there's something you can keep a very close eye on. That's the crypto sentiment report score. If that consistently stays at an 8 or higher, so consistently for several days in a row, without dipping back to a 3 or a 4 in between, then you've got a very reliable signal that a bull run is on the way. It has almost always been just a matter of time at that point. I'm very curious to see if we're heading for one of those again, actually. Okay, let's focus on monthly volatility. Not much change for several days now, basically since the last all-time high of $123,000 made the monthly volatility stick at 17.2%. And this means the high for July is now currently 17.2% above the low for July. Now, when you consider that the average monthly range is typically around 21.7%, you know that we can still expect quite a bit of movement in the next 2 weeks. If we assume that we will hit that 21.7% volatility again this month, like we do most months, apart from the last one probably, then the expected price range is between $101,300 on the low side and $127,800 on the high side. So if you're wondering what a realistic all-time high for this month could be, just reaching that level would be it. And it has nothing to do with trends, and it has definitely nothing to do with being a prediction. But a realistic high this month, around $127,000, maybe even a bit more. And a realistic dip, still around $101,000. So if either of those prices hits, it would still be perfectly within the normal range, within that normal 21.7% range. We'll simply have to wait, I guess, and see what happens. And the same goes for daily volatility, which is still high at 4.6%. Based on that and on yesterday's highs and lows, you can expect the price today to stay below $122,400 and above $114,800. Now, if the price does break out of that range, and that would not be the first time this week, then again, would be probably the third or fourth time this week, we could be in for a very interesting day. But now, at this moment, things are very quiet. I'm recording this at 12 p.m. actually, and the price is sitting at $118,000. It's right in the middle of that range. So I'm curious to see what happens. I always keep an eye on those two numbers, basically, because they tell me whether the day is going to be interesting or not. Oh, by the way, I'm actually in Europe, so all time frames I'm mentioning and timestamps, they're all European-based, CET. Let's look at some charts, and I know you can see those charts in this podcast, but if you want to see them, it's very easy. Just go to the show notes for this episode. You can always find those at bitcointodaypodcast.com. Daily chart first. It's consistently bullish, has been bullish for several days, nothing new here. It's also stably bullish because the moving average lines, they are perfectly aligned. The price is above the MA20 that is. The MA20, so the moving average of the last 20 closes, is above the MA50, and the MA50 is above the MA200, and all of them are pointing upwards very nicely. So everything looks great. The trend is stable and bullish. Nothing else to say apart that one other thing, the price it's actually holding above a very important support zone, and that is the key support zone at $117,400. And you might remember that from yesterday and the day before, because it's the first zone on the Fibonacci retracement tool that we draw, I think, last Monday, and we discussed it yesterday and the day before as well. So let's look at the hourly chart. The daily chart doesn't tell us much news, bullish. Now, there's a lot more to talk about when we look at the hourly chart. Firstly, the daily chart bullish, as said. The hourly chart is different, completely different. It briefly turned bullish yesterday, right after I recorded yesterday's podcast, but that didn't really last very long. The trend has already been flipping, I think twice. It flipped back now to bearish, and it's only if you look very strictly at the peaks and troughs, then you would say, yes, this now is a bearish trend. But honestly, those peaks and troughs right now, they aren't very reliable on the hourly chart, because the volatility on that chart is clearly starting to shrink. The price isn't simply moving that much anymore. It hasn't moved that much over the last 6 hours. There's only about 1.5% difference between the high and the low. This tells us, or at least it tells me, that something is about to happen. We are heading towards a classic, as I always used to call them in my Dutch podcast, a pressure cooking situation. The price range is getting tighter and tighter, and it makes the chance of a breakout very high. And actually, I have drawn a triangle on the chart. It's an ascending triangle. If you look it up, bitcointodaypodcast.com. And if you look at that triangle, you can expect a price breakout. When? This afternoon at about 3 p.m. Again, European time. Coincidence? Maybe. Look at the US and Wall Street. But the triangle, it's absolutely there, and that breakout could be triggered by, for instance, Wall Street. We'll get back to that very shortly. So if we just look at the charts, forget Wall Street for a moment, forget macroeconomics for a moment. If we just look at the charts, which way will the price break? Let's start with the hourly chart. Vague. It's really hard to tell right now. I mean, are we bullish or bearish on the hourly chart? Technically, you could say we are sideways, we're consolidating after having seen a bearish trend. But if someone would tell you that this is a bullish chart with a small correction, you might believe it as well. So I'm just going to say unclear at the moment. So let's have a look at the faster charts, even faster than the hourly chart. Let's look at the 15 and 5-minute charts. And those two right now, they are both bullish. And to me, that means that if we would get a breakout, this afternoon probably, the chance of a price increase is slightly greater than a price decrease. Not by much, but it's definitely there. And by the way, the moving averages on the hourly chart, they're also slowly starting to look bullish again. They are not really pointing in the right direction yet, but they at least are in the correct order now. So the chance, and basically just looking at the charts, the chance of a price increase on a breakout is a little bit higher than the chance of a price decrease, but it's almost 50-50. If I had to guess, I'd say 45 in favor of a price increase, based purely on the charts. But again, America, for the third day in a row, we get more data out of the US today, this time on unemployment and consumer spending, and this is the last time I'll say it this week. How this news is received, it will have an impact on Bitcoin's price. If those numbers are negative or the reaction is negative, Wall Street will get nervous, which automatically means a higher chance of a brief dip in Bitcoin's price. If the price does fall further, keep an eye on two key support levels from the daily charts Fibonacci retracement, $113,700 and $110,700. And you can see, or at least hear about those support levels about 2 podcast episodes earlier. But then, if the numbers out of the US are better than expected, there's more consumer confidence, there's lower unemployment, then Bitcoin could easily push on towards $122,000 and maybe even further. So it's a bit of a mixed bag. Based on the charts, I'd lean slightly towards a price increase. But looking at the news, I'm expecting more of a negative sentiment from Wall Street this afternoon, which would mean a price drop. You know, some days I'm pretty confident about which way I think things are headed. And as you can clearly hear today I'm not. It would surprise me if you were. And if you are, do let me know what you think is going to happen with Bitcoin today based on the charts and the macroeconomic news. And on that note, as I said, it's just my expectation. It's nothing else but that. It is not financial advice, and it's definitely not a tip for you to go out and do anything like buying Bitcoin or selling Bitcoin. Think of this for educational and entertainment purposes only. Okay, that's all for now. I'm very curious to see what happens today and how it all plays out. I'll be back again tomorrow for the last episode of this week. Until then, bye.